AI could sustain Nvidia's soaring stock performance. Nvidia 2.99%, has surpassed all expectations on Wall Street with its remarkable guidance, as revealed in its fiscal 2024 first quarter results for the period ending April 30th. Following the release of its report on May 24th, the company's shares surged by almost 25%, leaving investors in awe of its impressive projections. This recent surge has catapulted Nvidia's year-to-date gains to an astonishing 166%. Naturally, this prompts the question of whether it is too late for investors to jump on board with this high-flying semiconductor stock. However, before attempting to answer that question, it's important to understand why the market rewarded Nvidia so generously after its latest quarterly report. Nvidia's Q1 2024 revenue reached $7.2 billion, a 13% decrease compared to the same period the previous year. Nvidia is on the verge of a major breakthrough. Nevertheless, this figure greatly surpassed the company's initial guidance of $6.5 billion. Interestingly, Nvidia's adjusted earnings rose by 28% to 82 cents per share last quarter. While this may come as a surprise at first glance, a closer look at Nvidia's strong pricing power in the data center GPU, graphics processing unit, market helps explain the significant surge in its bottom line. Nvidia's data center GPUs, which come with price tags in the tens of thousands of dollars, are in high demand as companies race to deploy artificial intelligence, AI, infrastructure for training and inferencing purposes. During the company's latest earnings conference call, Nvidia CFO Colette Kress mentioned that cloud service providers, CSPs, worldwide are scrambling to deploy Nvidia's flagship Hopper and Ampere architecture GPUs to meet the increasing interest in AI applications for both enterprise and consumer purposes. Multiple CSPs have announced the availability of H100 on their platforms, with companies like Microsoft Azure, Google Cloud, and Oracle Cloud Infrastructure offering private previews. Additionally, upcoming offerings are expected at AWS, while general availability has been confirmed at emerging GPU-specialized cloud providers such as CoreWeave and Lambda. Numerous companies have reportedly sought out Nvidia's AI chips, prompting the company to place additional orders with its foundry partner. Nvidia's founder and CEO, Jensen Huang, expressed this sentiment in the company's earnings press release, stating that their entire data center product lineup is now in production to meet the soaring demand. The robust demand can be gauged from Nvidia's data center business performance last quarter, as well as its guidance. The company's data center revenue surged by 14% year-over-year, reaching a record-breaking $4.28 billion. Looking ahead, Nvidia anticipates generating $11 billion in revenue for the current quarter, surpassing analysts' expectations by at least 50%. Furthermore, Nvidia's guidance points toward a staggering 64% year-over-year increase in revenue compared to the previous year's figure of $6.7 billion. The chipmaker is also projected a non-GAAP gross margin of 70%, a substantial jump from the 46% recorded in the same quarter the prior year. These figures suggest that Nvidia's earnings are poised for significant growth in the current quarter. Can the stock continue to rise? Considering Nvidia's guidance has far exceeded analysts' expectations, it is plausible to expect the stock to sustain its remarkable rally. Moreover, investors must not overlook the fact that Nvidia's primary data center catalyst, generative AI, is still in its early stages. According to Polaris Market Research, the generative AI market is anticipated to achieve an annual growth rate of 34% over the next decade and reach a yearly revenue of $200 billion by 2032. During the earnings call, Nvidia management emphasized that generative AI is driving exponential growth. User title, description. 10 separated tags. ChatGPT title, Nvidia's AI-driven surge, sustaining stock performance and future growth. Description, explore how Nvidia's exceptional performance and guidance, fueled by AI-driven demand, have positioned the company for sustained growth and potential investment opportunities.